Good morning. Today I'm going to present about the ABC Corporation financial ratios. But before that, I will introduce myself first. I am Christy Joy Lasiman. So the presentation covers the following: current ratio, inventory turnover, net profit, quick asset test ratio, account receivable turnover, return on equity, debt ratio, return on assets, time interest earned ratio, total assets turnover, return on equity, net profit margin, and operating cycle. So let's proceed to the ABC Corporation Statement of Financial. ABC Corporation Financial Statement of Position on December 31, 2019. For assets, cash 50,500, account receivable 52,000, inventories 60,500, fixed assets 137,000, and the total assets is 300,000 pesos. And for liabilities and equity, accounts payable 65,000, long-term debt 75,500, common stock 53,500, retained earnings 106,000, and the total liabilities is 300,000 pesos. And now let's move on to the ABC Corporation income statement. ABC Corporation Income Statement December 31, 2019. Sales 450,000. Cost of sales 324,000. Gross profit 126,000. General and administrative expense 27,500. Earnings before interest and tax 98,500. Interest expense 12,000. Earnings before tax 86,500. Tax for 30% 25,950. And for the net income is 60,550. And now let's proceed to the financial ratios of ABC Corporation. Let's begin to the current ratio of ABC Corporation. For it is current ratio equals current assets divided by current liabilities. So, as you can see, the ABC Corporation current ratio is 2.51. As we can see, the current ratio of the ABC Corporation is increasing, so it means that it also increasing vice versa. A current ratio of 2.51, the ABC Corporation have a good ideal. So let's proceed to the inventory turnover of ABC Corporation. The ABC Corporation has 324,000 pesos cost of goods sold. The average inventory is 60,550 pesos using this information. And the formula is the inventory turnover equals cost of goods sold divided by average inventory. So as we can see, the inventory turnover of 5.35 or 324,000 divided by 60,550 pesos. In other words, within a year, ABC turnover its inventory 5.35. So now let's move on to the profit margin of ABC Corporation. ABC Corporation has 60,550 pesos net sales worth in previous quarter and spent total of 450,000 pesos towards various expenses. For the formula, it is profit margin ratio equals net profit divided by net sales. So it indicates that over the quarter, the corporation managed to generate profits with 13 cents for every pesos worth of sales. And now, for the accounts receivable turnover, the net credit sales of ABC Corporation last 12 months were 52,000 pesos. Based on this information, calculates the accounts receivable turnover. So the formula, it is accounts receivable turnover equals net credit sales divided by average accounts receivable. And those, the ABC Corporation accounts receivable turned over 1 times during the past years, which meant that the average account receivable was collected 365 days. And now for the quick ratio, the ABC Corporation transaction in financial statement for the period ended January 1, 2019 to December 31, 2019. The corporation has a cash of 50,000 pesos and accounts receivable of 52,000 pesos, the current liabilities of 65,000. And for the quick ratio, cash plus marketable securities plus accounts receivable divided by current liabilities. Based on the calculation, the quick ratio of the corporation is 1.58. So the ratio measures the ABC Corporation most assets could be settled the current liabilities which required to pay in the period shorter. And now let's proceed to the return of equity. The ABC Corporation has a net income 60,550 pesos and the average of common stockholders is 8,000. So the formula is return of equity equals net income divided by average common stockholders equity. So the net income 16,550 divided by average common stockholders equity 53,000. So the result is the ABC Corporation has a return of equity of 1.14. And now let's move on to return on investment, assets, and debt ratio. The formula of this is return on investments equals net income divided by average total assets. The net income is 60,550 divided by average total assets of 300,000 pesos. So the return of investment of ABC Corporation divided the average total assets of the corporation is 0.20. And for the formula of debt ratio is debt ratio equals total debt divided by total assets. The total debt 65,000 plus 75,500 divided by the total assets 300,000. So as we can see, the ABC Corporation has 0.47 debt ratio. The corporation have a greater assets than their total. And for the formula, time interest earned ratio equals earnings before tax divided by interest expense. It is earnings before tax 98,500 divided by interest expense 12,000. So the total is 8.21. And for the total assets turnover equals net sales divided by average total sales. The net sales is 450,000 divided by average total assets of 300,000, so the total is 1. And for the time interest earned ratio, it shows that the ABC Corporation has earned 8% of interest before tax. And for the total assets turnover, it shows that ABC Corporation, it indicates that over the quarter, the corporation managed to generate a total assets turned over 15 times. And for the formula of net profit margin ratio equals net income divided by net sales. Net income 60,550 divided by net sales of 450,000, and the result is 0.13. So it indicates that over the quarter, the corporation managed to generate profits worth of 13 cents for every peso's worth of sales. And for the operating cycle equals average collection period plus average inventory. The operating cycle of the ABC Corporation has a total of 424. And that's all for the ABC Corporation. Thank you for listening and watching.